Now, one of the earliest foreign entrants into the Indian mutual fund industry is calling it quits. Fidelity Worldwide Investments is selling its Indian mutual fund arm to L&T Finance. Now, Fidelity had some top-rated mutual funds within the industry, and there's a good chance that most of you hold one or the other of their funds. So what happens now to the funds that you hold that are now being controlled by a different company? Take a look.
You put your entire trust in them for years. So what do you do if they change into someone completely different? That's probably how you're feeling if you invested your hard-earned money with the Fidelity Fund House. One of the earliest foreign players to jump into the Indian mutual funds arena, Fidelity's asset management company has decided to hang up its boots after 8 long years. A volatile equity market and change in regulatory norms has pushed Fidelity to sell its mutual funds business. Fidelity is currently the 15th largest mutual fund company in India and has an impressive 8,800 crore rupees worth of assets under management. 68% of Fidelity's assets are invested in equity, and it controls some of the top-rated funds in its category. So it's no wonder that there were plenty of suitors when Fidelity announced that it was up for grabs. After much back and forth, L&T Finance emerged as the winner of that tussle. Fortunately for you, L&T Finance plans to keep all of Fidelity's fund managers on board during the entire transition process, which gives you enough time to decide if you want to stay invested with them. But what does this deal mean for you if you have invested via L&T Finance?
So what this transaction does is that it brings good quality equity assets, and it also brings retail portfolio and high net worth individual portfolio. It also takes us to a different league of for a 4,500, 4,600 crores AMC. We now, with these two together, we go to about 13,000 plus.
L&T Finance's debt-heavy portfolio will not only get the equity exposure it needs, but this deal will also make it the 13th largest asset manager in India. Also, L&T's funds, which it bought over from DBS Cholamandalam in 2009, haven't performed very well. So even though the financial details of the deal have been kept under wraps for now, this move could very well give L&T Finance the boost it needs in a choppy market like this.
Right, so that's the big news of this week. We saw Fidelity Mutual Fund there selling its asset management company in India to L&T Finance. Dhirendra, for investors of Fidelity Mutual Fund, what does this mean? We know L&T right now doesn't have a very strong equity management team. So going forward, what have you heard from the two companies so far? What will happen to investors who have invested in Fidelity funds?
One is that all the people who are in the business of running the fund, they will be coming on board at L&T, and the merged entity will be fairly dominated by Fidelity people. So for Fidelity investors, I think there will be continuity. One critical thing which I think one has to be watchful is the equity fund manager will provide continuity. They will be there and they will remain there as long as they are required. But L&T is but they will go back. The Fidelity fund manager will not be there forever. They will be there for a defined time frame. They will be there, and they are not walking away tomorrow. But this is going to be a change. So investors should be watchful, should not sleep over it. And for now, there is nothing to panic in, because the way it has been designed, I think they have been reasonably conscious of their the brand and everything that has been told to investors who came in Fidelity funds. I think they will have reasonable time.
For the time being, all of Fidelity's equity fund managers are going to move over to L&T Mutual Fund. They're going to help manage these funds until L&T gets the hang of it. So, as an investor, will I have to do any paperwork, or will it just mean that the name of the fund that I've invested in will change? Do you think the investors will have to do anything at this moment to facilitate the move?
Of course, these funds, over a period of time, after the regulatory clearances and the acquisition of this entity and the merger, per se with L&T, the name will undergo a change. They will no longer be called Fidelity Fund. The funds, I assume that they will be managed somewhat largely in the same manner the way they are being managed right now. I don't think investors should unnecessarily get anxious and should certainly not act in a haste which causes, some kind of tax incidence for them.
What about investors in L&T Mutual Fund? We know those equity funds have not been top performers, but the management was talking to the press yesterday about a wider reach, a stronger platform now once they integrate Fidelity into their system. So as an investor of L&T Mutual Fund, do you think there's anything there to look forward to?
I think important thing for investors is only that will my money be managed well? And will I be able to get, will investors get the same, same experience or maybe superior experience when they entrust their money to an asset manager? And I think, all these mergers where, a lot of people have to be combined in a single entity and coming from diverse places is not easy. But I think, Fidelity was a larger, more established and more process-oriented setup, and L&T was, L&T, not very long back, was, erstwhile Cholamandalam Asset Management Company, ever since it acquired, I think has been a very lean setup. It is dominantly fixed income. So I don't think, the integration is going to be a big problem.